Change lives.
cambiar vidas,
Change lives.
change organizations,
改变世界
change organizations,
Change the world.
Before coming to the GSB, Prital was working at McKinsey, and he also worked at Mars. He's going to be going to work for KKR after he graduates, but he's also very passionate about the issue of microfinance. And in addition to the work that he's done leading up to now, he's involved with some other students on an initiative to improve microfinance in the world, and that's what he's going to talk about today. So Prital, let's give him a big hand.
We live in a world in which every other child is born into poverty. A world in which 1.5 billion people live in extreme poverty. A world in which even here in the United States, poverty is a growing problem. When I was born in 1984, 15% of young households lived below the poverty line. Today, that number is 22%. That's unacceptable to me. I came to understand a lot of the issues facing individuals working their way out of poverty while working with microfinance banks in India. I'd go with the loan officers in their rickshaws on their daily routes, and we'd go to the clients in the villages. And these clients were so warm and welcoming, they'd invite us into their homes for tea. And over tea, we would talk about their families, their dreams, their aspirations. And I'd also learn about so many of the issues they faced day in and day out as they worked their way out of poverty. And during those conversations, I discovered something. I discovered that there was something common across all of these families that had helped them take that first step forward in moving their way out of poverty. And that was access to affordable credit. You may ask yourself, what could a small loan possibly do? My dad grew up in a small town in India. And during his breaks and vacation, he loved going with my grandfather to our small fruit and vegetable store. They'd get up every morning and they would head over to the store, open it up, and my dad followed my grandfather's system. So we'd have mangoes in the back and vegetables in the front, and they'd set it up and wait for customers to come. It was a pretty small store, but my dad had big dreams for it. That entrepreneurial spirit inside of him was already growing. He wanted to make it the biggest fruit and vegetable store in the whole town. But they didn't have access to excess cash or capital to invest into it, so it stayed a relatively small store, which was enough for their family of 10. When he turned 18, my dad had a chance to go to college, but the family didn't have enough to pay for tuition, so he borrowed from friends and family to pay his way through school. And 30 years ago, when my parents had a chance to come here to the United States, they arrived with only $12 in hand. But they borrowed from friends and family to find a place to stay and look for work. And 2 years later, when they finally had a chance, my dad, to start his own business, he borrowed from friends and family for that initial capital and built up his business into a successful small business. It was a small loan that helped my dad get through school and earn an education. It was a small loan that helped my parents come here to the United States, build their own business, and live the American dream. And it was a small loan that in part is responsible for why I'm here at the Stanford GSB. It's a long way to go from that small fruit and vegetable store all the way to Stanford University. Microfinance was designed to bring these opportunities to billions of people worldwide. Over 600 million people over the last few decades have been served by microfinance with the opportunity to have access to financial services. And yet, billions of people continue to live without access to affordable credit. And there are three things that are really holding back the full potential of microfinance. First, interest rates are prohibitively high. Clients still find themselves in spirals of paying loan after loan after loan without being able to work their way out of poverty. Second, there's a lack of sharing of information across banks, so that banks are operating in silos, even though we have tens of thousands of banks around the world. And third, the speed of growth of new banks has been too slow, so that still billions of people live without access to financial services. I'm starting a company called Lend and Save. Lend and Save is designed to solve these three problems by creating an IT system that will serve as the back end of all microfinance banks to allow them to do their operations. But more importantly, for the first time, Lend and Save will connect the network of microfinance banks together so that they're constantly communicating and interacting with each other to solve these three problems and unlock the full potential of these small loans. The first problem in microfinance today has been that interest rates are prohibitively high. Maria lives in a small town in Mexico, and she had seen several of her friends get microfinance loans to build their own businesses and help their family. And she got excited. She wanted to build a business knitting scarves and selling to the village so she can help her family. So she goes to the local microfinance institution and gets a loan. And the microfinance bank is excited about Maria. She is passionate, she is committed and skilled. So they give her a loan at the lowest possible interest rate they can, which is 80% a year. Maria takes that loan. She's believing in herself. She knows that she can do well. But she's scared. Even though she's bought equipment and material and developed her business for a few months, she's vulnerable to any shock that may come. Whether it's a health crisis or a natural disaster, she knows that the slightest thing can get her into a spiral of borrowing to pay off loans over and over again. It's not that these microfinance banks are looking to charge as high of a possible interest rate and make lots and lots of profit. In fact, their cost of borrowing is pretty high. A bank in India that needs short-term capital for a few months to get through a flood has a choice of either going to local institutions that charge a very high interest rate or not offering loans at all. When at the same time, Grameen Bank in Bangladesh has tens of millions of dollars of excess capital at that time, but there's no system to connect the two. And a bank in Sri Lanka that faces excess flooding from June, July, and August every single year can't partner with a bank in Russia that knows it has snowstorms from November, December, and January every year, so that together they can borrow at better rates. The second problem in microfinance is the lack of sharing of information across banks. Rekha lives in a small town in India, and she had seen 3 of her friends get loans to build their own shoemaking businesses. So she goes to the local loan officer and says, I want to build a shoemaking business as well. I have the skills and the knowledge on how to do it. The loan officer, having seen 3 successful clients before, gives her a loan and helps her get through that process of starting a business. Rekha builds her business by buying equipment and the materials she needs, goes to every training and service offering that the microfinance bank has. But a few months later finds that she doesn't have enough clients to sustain her business. That loan officer didn't have access to tens of thousands of examples of people just like Rekha in villages really similar to hers. He or she couldn't access in real time exactly the type of businesses that Rekha would be successful in and the services that would help her, even though that knowledge existed in the network of microfinance banks around the world. The third problem in microfinance has been the slow growth of new banks. Amadi lives in a rural village in Kenya, and he has a small mango farm. And he is excited about growing this mango farm. He may be the best mango farmer you'll ever meet. And he goes to his friends and family and says, can I borrow a little to invest into my farm and grow it to make it even larger? And his friends and family come back and say, Amadi, we believe in you. You're passionate, you're excited. We just don't have the cash to loan to you right now. So he starts looking and looking and looking. And for 50 miles around his farm, he can't find an institution to loan to him at an affordable rate. Opening a microfinance bank is expensive. There are tens of thousands to hundreds of thousands of dollars in IT, infrastructure costs, and personnel. And not only that, when Amadi walks into the microfinance bank, they don't know if he's simply borrowing to pay off another loan, and they're fearful for that. And this high cost and risk that's associated with the bank makes it hard for new microfinance banks to open. And so the high cost of interest rates, the lack of sharing of information across banks, and the slow growth of new banks have held back microfinance from its full potential. Lend and Save is designed to solve these 3 problems. At Lend and Save, we will create an IT system that will serve as the entire back-end infrastructure for a microfinance bank, using technology we have here in Silicon Valley. A bank will be able to use the Lend and Save software to interact with their clients, issue new loans, and collect payments. But more importantly, the software will not be just limited to that individual bank. For the first time, a network of banks will be created, all using the same system, so that they're in constant communication with each other. The Lend and Save system will reduce interest rates, so that that bank in India that needs short-term capital will instantly be connected with Grameen Bank for access to that, and Grameen Bank will instantly be able to evaluate the risk of that bank. And that bank in Sri Lanka will be partnered with that bank in Russia so they can come together inside the system to borrow at lower costs.
and that lower costs can be passed on to clients as lower interest rates. The Lend and Save system will also enable real-time sharing of information so that that loan officer, when Rekha comes to ask for a loan for a shoemaking business, will be able to evaluate her in real time and take the different data points about her and apply them and understand, no, it's not a shoemaking business for a village this size that makes sense, but in fact, if you use those skills in a belt-making business, and these are the different trainings that make sense for you, based on tens of thousands of examples around the world, that's the right thing that he'll be able to do. And the Lend and Save system will enable banks to grow at a speed that we've never seen before. Gone are the tens and hundreds of thousands of dollars of fixed costs, replaced with a low monthly subscription to the Lend and Save software. And when Amadi walks into a new bank, he can be assured that all the microfinance banks will be working on a similar system. So he's built up a credit history, and that bank will know that Amadi is credit worthy and can invest into his mango farm. The Lend and Save system will reduce interest rates, it will allow for real-time sharing of information across banks, and it'll allow banks to grow at a speed that we've never seen before, to unlock the potential of these small loans. My family was fortunate to have access to friends and family to help them take advantage of opportunities they were presented. And I know that's not the case for everyone. But I'm hopeful. I'm hopeful that together we can build the Lend and Save system. I'm hopeful that the Lend and Save system can bring access to affordable credit to billions of people worldwide. And I'm hopeful that access to affordable credit could be that first step forward in reversing the course of poverty. Today I'm building the Lend and Save team. We're looking for investors to fund it, team members and developers to build it, and advisors to guide us. If you yourself or someone you know is one of these three, join us at lendandsave.com. Together, we can build Lend and Save and take that first step forward to reversing the course of poverty, one small loan at a time. Thank you very much.